Ryan Pullinger with ATEX Resources. We are currently embarking on our Phase 6 drill program on the back of two very significant news pieces, our resource update on for 2025, and the acquisition of a strategic land package of surface and water rights covering our project and our neighbors.
Ben, good to see you, sir. Like sizes and everything, but you're proving otherwise, maybe. Talk us through the resource. Some pretty wonderful numbers coming out from that.
Yeah, I mean, on a combined basis, we nailed our guidance. We've been talking to the market about trying to get to a 2 billion ton resource on this next estimate. I think we shot it out of the park on the grade as well, getting that grade up to almost 0.8 copper equivalent, but also then 24% of that resource now sitting in indicated for the first time. Continuity, quality over quantity at the same time, but still both a little bit. And I think really like seeing that grade of the indicated, especially in the high grade porphyry core, very significant. Like 300 million tons at over 1% copper equivalent. That bodes very well for kind of the big picture. But let's talk about the B2B zone. And we've been targeting 30 to 50 million tons there, 1.5 to 2% copper equivalent. A little bit under there on the grade at 1.36 at 30 million tons. But we're just completing the first hole through that in Phase 6. I think we'll see that tons and grade come up. It really still is in its infancy, having only drilled it for 1 year so far. And I think we're on track to deliver on that as well as we roll out Phase 6 and Phase 7, which are very much more kind of that breccia discovery and B2B growth oriented.
Okay, well, I'll come back to the B2B zone in a second. Just sticking with the resource, just so I understand it. You've obviously, as you say, moved a lot into indicator. In terms of the drilling intensity, geostatistical confidence, how are you getting to that sort of circa 24% conversion rate?
So, I mean, there's a beautiful slide in our deck that kind of walks through like just how much we've grown in terms of our geological understanding, in terms of kind of the amount of drilling that we've put into this. Remember, in 2023, we only had 22,000 meters into that. We still had that three-finger model, right? So you're taking the higher grade material in the granodioritic intrusive, diluted out to the wall rock, and I think only 30% of that whole resource, 1.4 billion tons, was in intrusive. This year, after two phases of drilling, we're now up to 51,000 meters in drilling just into the porphyry. We're not talking about the drilling up into the gold oxide stuff up above. Just into the porphyry now, 51,000 meters. We've extended that mineral envelope by about 20 to 30%. We've proven the continuity of what we thought were those three fingers into a continuous granodioritic porphyry core. That represents just under 1 billion tons on its own. Then we have 1 billion tons of wall rock, and then a lot of space still to upgrade and find more of these B2B breccia-like targets. So really, it's just more drilling, more sampling, better continuity, better understanding of the geological model, and still open on both ends.
Okay, so the variogram models and the structural controls compared to 2023. A lot more money and a lot more understanding there, right?
So this is something that I found really interesting. Usually when you go from inferred to indicated, you see your variogram lengths, your ranges come down a little bit, right? What we've seen is we've actually matched on more tightly spaced drilling, especially into the high-grade porphyry core. We've actually matched those ranges and in places exceeded them. And again, intuitively, it kind of makes sense when you think about it from the perspective of we're drilling holes that have 1,000 to 1,300 meters of continuous greater than 0.3, 0.4 copper mineralization all the way down the hole. So assuming that you're going to get ranges of 200, 300, 400 meters when you're looking at just your statistics horizontally and laterally, when you already have that continuity vertically, it makes sense, and it also speaks again to the specialness of Valeriano. It is an incredibly well-behaved asset. The grade distribution is, I jokingly, I affectionately refer to it as spreadsheet mineable. It is spectacularly continuous in all directions, and it comes out to the host rock. It's just a very buttery smooth system.
Okay, and let's just jump onto the B2B zone then. How's the continuity model given us a bit more limited drill spacing on that?
So yeah, again, so we managed to draw out the core, which is at kind of like 1.3 to 1% copper, 1.36% copper equivalent mineralization down to 100 meters. That got us into indicators. So we actually have just under 30 million tons in 1 year of drilling in indicated, with another kind of I think 2 or 3 million tons at 1.05. So not only do we have like a core of this now drilled down to indicated, it's still open all the way around it, and there's still space in which we can continue to upgrade that, bring that grade up, increase the impact of that high grade as we kind of step out, and grow that wireframe by also understanding drill some holes to better understand the orientation and the controls on that, and then applying that information to B3B, B4B, and the boundary targets, which we have stepping up from B2B all the way up to our property boundary. So we are quite excited about the fact that I think we can still grow B2B and find more of them. And if we're successful in doing that, put a very substantial, smaller, higher grade resource together that could represent a starter operation that ultimately pays for not only what we're looking at today, but for everything else that gets found around us in the future. So, Valeriano continues to reward every time we drill it. One of the things that I think we pride ourselves on is being one of the most efficient, if not the most efficient explorer out there in the Andes right now, with a discovery cost of half a penny per pound of copper in the ground. You're looking at numbers that have not been seen since the early 90s. So the use of directional drilling, the blessing that we have with the system, which is so well behaved in such a special deposit, are really coming together well in terms of adding bang for our buck for shareholders, using shareholder capital incredibly wisely, and being able to consistently deliver growth and find pounds of copper very cheaply.
Okay, great. So beyond the B2B zone, more broadly, I mean, what are you doing in terms of capturing these kind of high grade? Better capturing the high grade variability across the project, because assuming you're going to want us to work out where you start first, and I'm going to talk about land acquisition in a second, but you got to plan for the future, right?
Yeah. So I mean, really, what we want to do now is kind of like figure out where the center of gravity for higher grade mineralization is. So we have, as I said, we've had this series of targets from the south to north that are kind of sitting above the porphyry. The hallmark of these breccias seems to be that they have this magnetite core to them. So it shows up very well in the magnetics. It shows up very easily when you're logging the core. You walk around with your pencil magnet and bang, this is the start. It's magnetic all the way through. You're seeing the upgrading of chalcopyrite to bornite, and then even all the way up to digenite in there as well. So some really cool copper speciation for nerds like me. Some really cool characteristics that make it very kind of, I'm hoping, and we'll find this out, compelling as far as that targets from a magnetics and structural perspective. And phase 6 will tell whether or not that recipe works out for exploration.
So what does that mean in terms of focus? You're trying to work out that kind of indicator component for phase 6, phase 7, etc. Do you focus on the B2B breccia, or do you think there's going to be porphyry infill as well?
Look, I think there's still some questions that we need to answer about the porphyry, especially when we've seen these higher grade gold trends up to the north, and we haven't closed the porphyry off to the north, so it might keep on getting bigger. So I think, like as you said, like scale has a quality of its own, and I think we're kind of like getting to that point where the scale is no longer the question here. The question is more, what does this look like going forward on a potential economic study, which means we want to know where the highest grade part of this is that would help this project achieve payback as quickly as possible. And that's going to be defining more of the B2B, which is still open. And I think we can continue to grow it up dip, down dip, and along strike, and then find more B2B-like deposits along the way and put that all together and see what that looks like. And that, I think, will be, phase 6 will be very much about testing this thesis and seeing if we can make more of these discoveries. And then phase 7 will come back and define it and see where we end up at that point.
So how does that work in terms of when you're kind of comparing breccia compared to porphyry, host, etc.? Things like geotechnical rock mass ratings, etc. Sort of come into it a little bit. Have you done any preliminary work on that?
Look, I think that at this point it's a bit early. Like what we have done is met work, and the met work it looks exactly the same as it does with the porphyry, so still high 90s in terms of copper and gold recovery. The beauty of it is when it comes out of the ground, so it does have a slightly lower SG, so we've done that work, so we know in terms of bulk densities and stuff that it's about 2.55 compared to our porphyry, which is 2.6 to 2.65. So not bad. But what's really interesting about it, Matt, is it comes out of the ground intact. You hit it with a hammer, and these breccias just fall apart because they're cemented very late. So the kind of like mechanical breakage that you can expect from that, I think, lends itself to very low mining costs in the future. But that is a bit of an arm wave for me. It's a bit early to tell, but it's fun to speculate on these things.
Okay, and I'm probably speculating on the next thing here. You talk about being able to demonstrate scale. 2 billion is a big number, but things like, we've seen it talked about a lot in this space at the moment. Sort of starter mine, how does that impact project NPV, relative to kind of scale block cave type strategy?
Matt, I've yet to find somebody who can tell me how you value a 200-year cash flow. So that is the scale of what we're looking at here. If you were to build Valeriano today at 10 million tons per annum as a block cave, how do you value it, right? Because it'll take you a few years to achieve that payback, or to build it up. So you'd be sitting on that capital for a few years where you build it up. Once you turn it on, just on an average resource basis at 0.78 copper equivalent, you're looking at about $70 post-recovery in situ value against around a $20 per ton mining cost. So on 10 million tons per annum, if you're making $50 per ton, and this is on the global resource, then you start looking at that as, okay, so what if I take 10 million tons per annum, and for 30 years I'm mining at over a percent copper equivalent, over $100 per ton in situ value. Now all of a sudden you're making $80 to $100 per ton margin. These things generate incredible cash flow once they turn on. And as you said, the capital for that there is a bit of capital intensity and a period of time that you have to wait for payback. So bolt on a supercharger that can give you something that can probably be built for less than $1 billion, that has $150 to $200 per ton in situ value, that you're mining at a $30 to $50 per ton cost. You're still looking at significant cash flow, except you can bring that forward, pay it back in 2 to 3 years. And then what we'd like to see is a 10 to 20 year life of mine that you're generating that cash flow that you can reinvest into infrastructure, into the bigger picture, into exploration. We think this is going to be a cluster. This is a district, and it's 100% in Chile, underground mineable, more environmentally friendly, uses less water. And right now, I think we have the rising star in this area that continues to deliver and has all the things that you need to see to put a district into production. Grade, payback, scale, and now surface rights.
Okay, I guess a lot of variables there in terms of strike continuity and blending feedstock and metallurgy and all the other things you're going to need to kind of put together to kind of put some economics around this eventually. But for now, this is phase 6, potentially phase 7, and moving along. You seem to be rewarded by the market. You don't feel under any pressure to kind of rush into some economic study, do you?
Look, I think we do ourselves and the project and our shareholders a disservice if we ran into and did something that wasn't ready. And I think, again, like addressing the payback question and how you can build this and scale it is how we generate that value. Is like, how can we build something that or show something that can pay itself back very, very quickly, de-risk that cash flow, not be something that has to be, and copper is big balance sheet business, we know this. But if you can do it on a smaller balance sheet, that you can de-risk that capital while you're investing in the infrastructure, looking at consolidation, linking up with other projects, it just gives you a lot more time and a lot less pressure on that project. I think it's the right way to approach it. And so give us another year or two of drilling. Let's see if we can find some more of these high-grade breccias, really show what this project could potentially do on a small underground mine, how much cash flow that looks like, what that cost would be, and then we'll see what the impact is ultimately on developing that potential block cave and the district. And maybe we'll find some stuff along the way. We have our neighbors to the north at El Encierro. We're very excited to see them drilling again, probably not this year, maybe next year. Their project looks like it has a very similar attributes to us. And I think when you start to look at this on a district basis, it just gets very, very exciting. And there isn't a lot of inventory like this on the market right now. And what you've seen with BHP investing $16 billion to invest in declining production in Escondidas, somebody has to start building new projects at some point in the future. And there just aren't a lot in safe jurisdictions. Like, look at what's happening internationally. As again, with big balance sheet business, you have to bet on the country as well. I think we're, now putting out a resource that solidifies Valeriano as the biggest copper discovery in the best jurisdiction for copper in the world in over a decade at a discovery cost not seen since the 90s. That's a pretty impressive and pretty valuable asset.
Okay, well, I'll stay away from metallurgy, processing, infrastructure questions and focus on getting bigger. And to that end, obviously,
Yes.
14,500 extra hectares, just in case big wasn't big enough. Why?
So these are surface rights. Very, very important to differentiation. Yes, we did add a bunch of hectares on exploration ground with some new kind of lithocap style stuff that we see at surface. that we think could ultimately in the future maybe lend to a new Valeriano. But we'll park that for now because we have enough in front of us to talk about today. But surface rights. When is the best time to buy surface rights for a project, man? And I think the answer is when you can. When you look at what's happened with Mag and Fresnillo, Goldcorp Fortuna, even our friends at Nico and Milartic, this is something that can in the future often become a stumbling point for projects. And in order to permit infrastructure, something that you have to have before you can start that permitting process in Chile. So in the event that something becomes available, the surface rights do cover our project. They do cover Alan Sierra and the Codelco Torrente project. So a very strategic piece of business for us, but also allows us to really be our masters of our own destiny in terms of how we develop roads, how we develop new camps, how we develop potential infrastructure in the future, or permit maybe for an exploration decline or something like that in the future. It really gives us a lot more flexibility and becomes kind of a strategic asset in terms of the ultimate themes around consolidation, or maybe we have to sell parts of that to our partners and to friends in the area later on. It's just a very good piece of business for us. And not only that, it does come with water rights. So the two biggest direct benefits for us are we're no longer paying to access our project. Our friends, there are existing contracts with other companies in the area now that we inherit as well. So there's a little bit of a modest cash flow coming into the project. But I think when you look at the benefit of having water rights that we can use for exploration, that's a huge cost for us, because right now we're purchasing water from other water rights holders in the area, and we're paying to truck it to the project. So if we can eliminate trucks, eliminate purchasing water, it's actually a relatively big swing, especially as we continue to ramp up drilling and use our water as wisely as we can. We do recirculate and filter water. So we try to use as less water as possible, but we will always need water for exploration. So there's a couple of really, really direct and really short-term benefits to having this as well.
Okay, so future, I guess land access, water, potential JVs, or at least maybe even offloading or sharing land package. Yeah. Right. Okay. Yeah. So much smart. How does it help in terms of permitting or at least reducing permitting risk?
So in order to permit in Chile for whether it's an exploration decline, a ventilation raise, a piece of infrastructure, a new camp, you have to own the surface rights before you can enter the permitting process. So either you have to be able to buy the surface rights around you that you need, or you can go to the court and get a judicial easement for mining. There's different ways of doing that. They all have different risks and they all have different timeframes. We have now eliminated that risk in that time frame, and that we can now go and permit whatever we need to with the right environmental assessment, with the right work, the right engineering on our land. We own the surface rights, so we can move forward as soon as we need to.
And what did that deal look like? Obviously, you got a good, decent cash balance here, but you got to work out allocation, drilling, land acquisition, engineering studies, etc.
Yeah. So look, without getting into too much detail, this has been a land package that this gentleman, that we acquired from a very, very, very lovely Chilean gentleman, has had for a long time. He's been in conversations with our neighbors over the last decade. So the fact that we were able to end up with this land package, I think, is proof to our community ties and relationship with our stakeholders and partners on the ground. And we're laid out $21 million in US, so just under 30 million Canadian for that. And that leaves us with a cash balance of north of $20 million, with another $52 million of near in the money warrants with Agnico that we can call in 2026. We remain in constant conversation with our partners like Agnico, Mr. Lasson, our favorite shareholder and one of the industry's most famous and successful gentlemen, Trinity Capital Partners as well. Look, when you look at our share register and kind of what we've done in the past, we will always, I think, have the access to capital that we need on a very shareholder-friendly basis. And we love bringing in new partners as well at the right time. So, we're confident in our ability to execute phase 6 and beyond with those relationships and with what we have on the balance sheet right now.
Okay. And obviously with the Alan Sierra and Torrente, Filo de Sol, Jose de Maria, they have a certain sort of profile, and is this kind of very much for you, sort of cookie cutter, to do what they do, and you'll have the same sort of level of success, or have you kind of got your own path to tread?
It's a really hard thing to debate around value. Like the way I see it and the way we try to operate at ATEX is we do the right things to create the long-term value that we can, and ultimately the market will catch up. And I think, what we've delivered is something that I think, my job now is to get back on the road. And I just came from a day of New York yesterday and just remind people how special this asset is, especially at a time where, we've seen with Grasberg and Cobre Panama stuff, copper is becoming harder and harder to put into production and to keep in production, and things happen. You need to have more supply. You need to have more projects getting built. And this is one that I think, especially now that we own those surface rights, I think we can start to point to a path to production for this project. It's not just drill, 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 drill. So, look, I think the value comes from us doing the right things, working hard, putting ourselves in the positions that we can be opportunistic when things like this land acquisition show up, and just do the right things to create long-term value for the project, the stakeholders, the people of Chile, and obviously our shareholders.